Hi everyone, welcome to today's video. So before we kickstart the core video for today, let me address a very quick rumor. The rumor is that I have sold my entire portfolio and now I just make like YouTube videos. That's it. That's how I'm making my money, all that stuff. So three important things, and I'm saying this to benefit you because a lot of people are trembling in the market right now because the markets are falling. So three quick points. Number one, I have not sold my portfolio. 95% of my portfolio still remains the same. In fact, if you just check a few of my videos earlier, I've been saying that I'm buying the dip. I've shown some live investments already, huge chunks of live investments. And point number two, I will continue to invest live. I will continue to invest more. Point number three, till what point will I invest? Of course, I would wish that I knew where the bottom was forming. Every investor thinks that, but no one is able to predict the bottom of the market. But now I know for a fact that we are on the downward sloping curve of the market, that the markets are falling for sure. It is trading at a discount. So therefore I continue to invest and I will continue to invest. Now this is not a push from my side that go invest in this asset, that asset. If you feel like, invest. If you don't feel like, don't invest. That is the simple message or point that I wanted to communicate, because right now I understand that there is a lot of frustration in the market. People do not like to see their portfolio in red, and many of them are first time investors and they take out their gussa and yes, lump it on everyone else. So with that disclaimer out of the way, let me start today's video on a positive note and let me talk about three facts about an economy, and I would request all of you to type the name of the country that I'm speaking about. So fact number one, according to 2019 UN data, if you take the foreign direct investment to GDP ratio, this country came behind North Korea. So the situation was worse than North Korea. This is fact one. Second key fact, that the debt to GDP ratio of this country is roughly 240%. So which is very, very high. This is fact two. Fact number three, this country's government is printing crazy amount of money. So now you will say that, Akshat, probably you are speaking about Somalia or Djibouti, etc. countries, some random country. No, I'm actually speaking about the third biggest economy in the world, which is Japan. So these facts are relevant to Japan. Now some of you would say that, Akshat, you said that you have started the video on a positive note. But these are all negative things. Why are you talking about it? Because I wanted to portray the fact that everything that you read in newspaper or from the Western media, you need to question it. You need to use your own logic brain. So I would present an economic analysis of Japan, what is happening in Japan right now, why the world needs to bother about it, and number three, how this is going to impact you personally. So people who watch this entire video, I am hiding a great career tip that you can implement and it can be a life changer for you, but you need to watch the entire video to figure out the answer. So let us get the discussion started. Also a very quick shout out to our sponsors for today, which is Kuku FM, which is an excellent audiobook learning platform. I personally listen to a lot of audiobooks from Kuku FM, and right now I'm listening to Undercover Economist. I have read the book entirely. I'm listening to the summary of that book. There is a special discount code that you can avail by checking the links in the description box. So with that said, let us first and foremost take a look at this particular graphic and let us understand the gravity of the situation that yen in Japan, which is the Japanese currency, it has fallen by roughly 20% in the last 1 year. This is a very, very big fall, and entire Western world is panicking that, you know what, third largest economy is going bonkers. So something is terribly off. If such a situation continues, it can lead to stagflation, it can lead to deep recession, whatnot, right? So let us understand the viewpoint very quickly, that is a falling yen a problematic situation or not? Because if you think about it, China literally skyrocketed and grew its economy because it strategically devalued its currency. So it's not as if that just because some currency is falling, it will become a bad situation. Same situation is happening in India to a very large extent, that our currency keeps on falling and entire narrative is painted that, you know what, currency falling, really bad scenario, this, that, and you know, the government is not able to handle this. And see, I'm saying good things about the government. I'm not changing my tune. Earlier, I have made a separate video on why falling INR is not a bad sign for India. You need to see that thing in context. So similarly in Japan, just because yen is falling, it does not mean that it is the end of their economy. We need to study the reasons more as to why they are depreciating their currency. So whenever the value of the currency fall, it is called as depreciating your currency or devaluing your currency. So let us systematically understand why is it that the Japanese government is devaluing its own currency. So here is a very simple way to understand that how does currency devaluation actually works. So first and foremost, every country, be it India, be it Japan, be it Singapore, it needs money to grow. Every company needs money to grow. Every individual needs money to grow. Similarly, every country needs money to grow. And how do they get money? They get money either through taxation, through actually increasing the productivity in the economy. And the easiest way is print more money. Printing money means taking more debt. Now, let me help you understand that concept more. For example, when we say that XYZ person took like 10,000 crore loan from India and ran away to the UK, what does that taking loan of 10,000 crore means? It's not as if that banks in India will collect 10,000 crore rupee in some briefcase and give it to that person. No, it doesn't work that way. Every time huge amount of debt is taken in the economy, new money is printed to support that debt. This is a very, very important concept, which conversely means that every new note or new currency that is printed in the economy, that becomes a debt for that country. So I hope this complex viewpoint is clear in a very simplified manner, that every country needs debt and there are multiple options that they can explore to take debt, and money printing is one of the easiest option. So then country keeps on using that money day in and day out, and their debt to GDP ratio keeps going up and up. Right now the situation in Japan is that their debt to GDP ratio is 240%. Now debt can be an extremely complicated subject, but the point that you need to keep in mind is that whenever you are reading newspapers, sometimes news headlines are flashed this way that 240% debt, everything is going to go bonkers, everything is going to fall apart. No, nothing like that. Here you need to understand the concept of internal debt versus external debt. A lot of countries, for example Pakistan, Sri Lanka, they took external debt in some other currency. A lot of US debt is internal currency in US dollar. Similarly, Japanese debt is denominated in Japanese currency. So internal debt is not as dangerous as external debt. Now comes the third and final part, that okay, if you have taken debt, be it internal debt or external debt, then you need to repay it. Now, how can country repay it? First and foremost, they will need to raise the taxes or improve the productivity. For example, manufacture more stuff, export it to different parts of the world, get that money and then repay the debt. But these two options are very, very difficult. So third option is the easiest. So imagine this, that if the Japanese government, let's say hypothetically speaking, it has 1000 million yen of debt that existed. Now what Japanese government can do is that, okay, fine, we have to pay 1000 million yen of debt and we are going to repay you 1000 million yen of debt. But how? We are just going to print more. So therefore, the Japanese government keeps on printing more and more and more currency. So that is the simple back end game that is happening, that yes, people are getting paid their debt, but the value or the real value of that debt is going down considerably. Now, in technical terms, what Japan Central Bank is currently doing is that they are pegging their debt at 0.25% yield. So what is meant by that? That is such a complicated statement. So right now you must have been listening to US commentators. Fed has increased the interest rate by 0.75 basis point, and as a result, the stock market fell. There, the Feds in the US, they have increased the interest rate. But in Japan, they are not increasing the interest rate at all. They are just pegging. They have picked a number that we are going to repay our debt at 0.25%. That is the number that they have picked, and the way they maintain that number is by printing more and more and more currency. So this will get super complicated if I delve deeper into the explanation, but I hope you understand the picture that debt is being artificially managed in the US also, in Japan also. Just because some country's currency is getting devalued, it does not mean that that country is going to go bankrupt. This is the entire narrative that is being played around right now, and that is not the correct understanding. Now you would say that, Akshat, you know what, this is like really confusing. Why would a country devalue its own currency? Does it even make economic sense? Sometimes yes, that answer seems legitimate, and let me point out to 3 specific data points from Japan which will give you confidence as to why such a move in Japan is somewhat sensible. So take a look at this graph and you will notice some really interesting things. So first and foremost, the overall population of Japan is decreasing. Second key thing, the proportion of elderly population, it is increasing. Third key thing, you will see that the younger generation is shrinking in Japan. Now this is called as the aging problem or declining fertility problem in the developed parts of the world. And this is the reason why India has such a massive competitive advantage, not because of some technology revolution, but because of the fact that our population is young, hungry to work, and it can contribute in actual terms to the GDP. But in Japan, opposite problem is happening, that their population is elderly, they cannot work, they need to be supported by the government, and inflation in Japan needs to be kept somewhat artificially low, and there are series and host of challenges that the Japanese economy is facing due to its population or demographic shift. So now, if you think through this graph, what you can easily understand is that this is the population that most likely will be paying taxes, and their taxpayer base is shrinking every decade. So how can the Japanese government repay their debt? One simple thing is that, just devalue the currency, and that is what they are doing. And that becomes one of the prime sources through which they are able to somewhat manage their debt. Now, the second key reason for Japan to devalue its currency or print more currency is that it is trying to make its exports cheaper. Now, whenever a country devalues its currency, its exports becomes cheaper. For example, China is a classic case that from the start of 2000 onwards till approximately 2014-15 also, China has been labeled as a currency manipulator, and it benefited a lot through this currency manipulation. So Japan also sees some benefits in terms of devaluing its currency, and traditionally in the past, Japan's import minus export, which is called as trade deficit, it has approximately stayed close to zero or positive. So from that particular perspective, a country like Japan benefits by devaluing its currency or printing more currency. And you can also see from this graph that Japan is a manufacturing oriented economy. It generates a lot of GDP through manufacturing, and manufacturing sector benefits if your currency is weak. Now, third and the most interesting reason why Japanese print more money is because they don't have an inflation problem. For example, if you go and study the case of US right now, US is witnessing very high levels of inflation, highest in the last 40-45 odd years. Why? Because they have printed too much currency and it has resulted in inflation. And now they are trying to dial that situation back. But in Japan right now, the inflation is 2.1%. That's it. So they can afford to print more money, and they are likely to continue to print more money till the point inflation does not become a problem. Now comes the natural question that here we have Japan on one side, which is printing money like crazy, but still their economy is not getting wiped out. They have been printing money like crazy for the last several decades now. No problem in the economy, country is very rich, so on and so forth. On the flip side, we have countries like Venezuela, Zimbabwe, Sri Lanka, that started printing money and their economy literally went bankrupt. So what is the difference here? And can Japan become like Sri Lanka at some stage? So one primary thing that you need to notice is that Japan has very low inflation, and inflation is not rising in Japan, as I was saying previously. Now this provides an excellent support system in terms of printing more currency and giving government control in terms of money printing. Now you would say that, there is some God's power at play, that some countries go bankrupt due to inflation problem, and inflation is not a problem in Japan despite excess money printing. So is there like a method, is there a formula that I can look at and assess whether India will also go through a similar crisis or not? Now, many economists will differ on this, but here are a few key examples that I will give from Japanese society. So first and foremost, Japan is a very self-reliant country. So first and foremost, take a look at this chart, and what you will categorically notice is that import to GDP ratio and export to GDP ratio roughly comes out to be between 17 and 18%. So they do not run any trade deficit. They import 18%, add value to it, export 18%. So that is the game that they are playing. They are a very self-sufficient economy. Many growing economies or very consumer-oriented economies tend to have higher consumption. For example, India. So therefore, our import compared to GDP is much, much higher compared to Japan. Similarly, in the US, there is a lot of wastage. Now, a classic case in point is that, for example, if you go to Japan, you can get one boiled egg in their retail store. In the US, now, of course, you can give me exception that if you go to a Japanese store, you can get one boiled egg. But no, in the US, there is a lot of buffet system. People waste a lot of food. If you have to buy things, you have to buy in big packages, whatnot. So US is a very consumeristic economy. It spends a lot of money. It values spending a lot of money. But Japanese economy is very, very different. They are very frugal people. They are very self-reliant. They are very self-sufficient. And also the culture is such that there is no mad race for growth per se. So I would say that I'm not saying all the reasons are here, but at least one of the key reasons why Japan does not see inflation is A, because of aging population, and B, because of the fact the way Japanese society has been designed. So going forward, while the world grapples with the problem of inflation, Japan is unlikely to see very high levels of inflation. So that is the good side of Japan. Now let me show you the bad side of Japan. And here is a chart for you. If you take a look at this chart, what you will notice is that their trade surplus was always used to be around zero or positive. It simply meant that they are net exporters, not net importers. But right now they are importing more as a percentage of GDP. Now, one of the prime reasons for that is the escalation of energy prices, and Japan is a net importer of energy, and therefore its total trade deficit is a a little bit off due to high energy import crisis. Second key point, if you take a look at consumer debt, and for this you can follow debt to percentage of GDP ratio. In ratio terms, debt has gone up during 2021-2022 period. Why is that? It is because of the shrinkage of Japanese economy. Now, Japanese economy is a very fragile economy. It cannot take a lot of hits per se because their real productivity can be disrupted very quickly. Why is that? Because they have very less working age population. It is an isolated island. So everything needs to be moved into containers in order for import or export to get facilitated. There are a bunch of reasons for that. It is a much more fragile economy if the world trade suffers for an elongated period of time. Now, third and final reason why the Japanese economy can suffer a lot is that their real GDP cannot be increased by too much. Now, again, coming back to that concept of working age population not being there, there are real challenges there. Because if you think about it, real GDP can be classified as this. It is the population that work or the working age population of a particular country times the value that each person is adding on an average. Now, in Japan, the issue becomes that since their population itself is shrinking every decade, it becomes a major problem for them. And this is where the opportunity for younger countries like India comes into the equation. Now, let me share some personal stories here. For example, I have a lot of friends in Japan. They were friends with me in India also. They learned Japanese and moved to Japan and started earning like really good money. Why? Because the Japanese government is looking for people who can help them sustain their country, so to say. Now, I'm not trying to promise you stars and moons, but if you are in the early phase of your career, learning something like Japanese and learning more about the Japanese culture might be a game changer for you. Think about it this way, that Japan right now is a high-end manufacturer. Their systems, processes, less corruption there, many good things are there. But the problem is that they have no one to take advantage of those systems. So they are very open now in terms of bringing foreign immigrants from different parts of the world, and India becomes one of the prominent locations. Japan has excellent study abroad programs. It gives out scholarships. So learn more about it. If you feel that Japan is a location where you can learn, it might not be a bad idea to invest some time learning more about their culture, customs, and spending a little bit of time there to get a sense of what their economy is like. Best part is that a few decades ago, Japan used to be extremely closed, and it has recently started opening up its economy to foreign workers, which is a big pivot moment for countries like India, which has excess of workforce available. So you can definitely explore this option. And also a very quick clarification, because people keep on commenting that Akshat, you are advising people to go abroad. I'm not saying that go and settle abroad forever. Work there, learn about their culture, customs, bring best practices in India, benefit India and the world at large. How is that taking away anything from India? So it is not about that. It is about you optimizing your potential so that you are capable of adding more and more and more value. And if you go abroad, learn more about different cultures, especially from developed parts of the world, it would allow you to add more value. For that, continue to upskill. But I hope you enjoyed this video. Please press the like button if you did, and let me know in the comment box, what do you think is going to happen to Japanese economy, because it is standing at a very pivot moment where things can go either way. My answer, I will put it in the pinned comments. Thank you so much, and I will see you tomorrow.